Hello everybody. So I did not want to make this video, but I will. What's going on is the name of the video. Breakers were triggered in Asia. The market is buzzing about a potential Black Monday. What is going on? Well, the NASDAQ future opened and the NASDAQ looks like it's going to be down another 5%. So we had minus 5% on Thursday, minus almost 6% on Friday, and maybe another 5% today. This never happens. I mean, it hasn't happened in my lifetime. The only time that this has happened is 1987. That's now the reference. The reference is now 1987. This is pretty darn nuts, if you ask me. The Hong Kong Hang Seng plunges 10%, mainland China CSI, so that's the big index, 5%. Taiwan stock market trading halted. They halted it in Taiwan, even though Taiwan offered Trump 0% tariff. They offered reciprocal 0% tariff, yet the stock is still tanking over there. And, you know, very influential hedge fund managers like Bill Ackman are calling for a pause on tariff, and it's pretty darn bad. And JP Morgan is getting concerned about the stability of its hedge fund clients and the stability of the people, who had too much margin and were having too much trades. So anyways, the statement of Jamie Dimon, we're going to make the most money ever this year, that statement is now gone as he was making on Trump's, I think it was inauguration day or whatever. Anyways, Bitcoin is also the only thing you can sell on a Sunday. And I blame this. I mean, of course, every Sunday before the market opens, Bitcoin drops a little bit because you have Binance who's manipulating the market. That's one reason, but another reason for this drop, which was a little stronger than usual, is, I believe, because it's the only thing you can sell on a Sunday. Bitcoin is slightly recovering. Slightly, we're not there yet. We'll see tomorrow morning. It's slightly recovering. Microstrategy opened way down and it's going back up. So Bitcoin is still the asset for the win, if you ask me, because in 2022, that would have been a way worse situation back when we had not even close to the market triggers that we have right now and to the market fears that we have right now. Anyways, let me go back to some of the rules that I've said multiple times on this channel. But this is no investment advice, right? This is just the rules for myself, and I hope you find this informational, right? So first of all, the first rule to know is that 3 days in a row of minus 5 to 6% on the NASDAQ, 3 days in a row, that's entirely unheard of. Look at all of the YouTubers right now, whether they have value stocks, REITs, everything's down. There is no hiding from this. The commodities are way down. Gold is and everything is down. There's no hiding. The whole thing, the NASDAQ is more volatile than the S&P. That wasn't the case on Friday. On Friday, the S&P dropped more than the NASDAQ. There is no hiding. 3 times minus 5% in a row. The only thing that I can compare this to is the 1987 crash. But the 1987 crash happened over 1 day. In our case, it's over 3 days. Why is it over 3 days? Because it could not happen over 1 day because of the circuit breakers. After 1987, they put circuit breakers. Those circuit breakers are 7%, 13%, and 20%. And if you reach 20%, the market shuts down. The market closes. Did the market trick the circuit breakers? Really? Did the market really want to drop 22% when the tariffs were announced? But it didn't, and so now it's like taking a sneaky way to give us the same slap in the face. It was like minus 6, minus 6, minus 6. Okay, well, if you compound that, that's exactly the same as Black Monday. This is worse than 2008. This is pretty nuts, if you ask me. So realize that it's nuts. This is not the normal market. If you've lost money, there is nobody to blame, in my opinion, with this. This is pretty darn crazy what is happening. In fact, It's longer than my lifetime. So anyways, this has not happened in my lifetime. So this is this type of event. Point number one. Point number two. Please, no leverage. Be so careful with leverage. Why people are calling the Fed to act now is because there are some hedge funds that are in trouble, that have had too much leverage. Be so careful with leverage. Be careful, especially with those 2x single stock ETF, right? A 2x, if a stock drops 50% and you get a 2x, what do you think happens to the ETFs? I'll let you figure it out. They can be fully wiped out. I guess I wrote it here. I'm not letting you figure it out. Anyways, if you have puts, or if you have some sort of options and these options are bleeding because you didn't do a spread or something, my view on this is I would pay a price, take a loss, and avoid a wipeout, avoid a margin call, because, these losses can get exponential if you've been playing with options. So be very careful with that is my point here. And this is definitely not normal. I'll say it again. It's worse than 08, worse than 2020. And of course, 2022 was a complete joke compared to what is happening right now. Moving on again, for investors, and this is really, again, my new rules, my overrules, is this is the most awful thing would be for you to just be scared away from the market from this event. Like, I feel bad for anybody who started investing after 2020, because we feel like we can't catch a break since 2020. The 2020s, I think it's too late already for them to be a decade like the 2010s. The 2020s are going to be nothing like the 2010s. They're going to be a pure stock pickers market. Look at stocks like HIM, for example, and it's easy to be desperate, because HIMS is back at 22, by the way, and was trading at 72 not too long ago, closed at 68, not too long ago. By that I mean like 50 days ago. So remember that stocks go up over zoom out, right? Stocks go up over a multiple year period, especially hyper growth stocks, which is what I cover on this channel. I started covering this stock on the channel when it was trading at $6. It's at 22. You're still nearly a 4x. I also was making a lot of videos on Palantir when it was under 20. Not just me, right? A lot of people made videos on Palantir when it was trading between 10 and 20. Well, you're still up a 6x on a Palantir. So zooming out is important. Time matters, but if you just entered the market in 25, this is the kind of thing that can spook people out of a market forever. And I would really, really be careful about not judging this as a forever thing. This is not a forever thing. This too shall pass. By the way, tomorrow I should have a video coming out called Recession. Is it good for HIMS? Yes, the recession should be good for HIMS. Moving on. How am I playing this drop? What am I doing? How am I playing it? Well, so point number one, Bitcoin is such a core position for me. I'm amazed by how well Bitcoin has done. It's only down to 79K right now. I remember 2022, like I said, a way less severe crisis in 2022. 2022 was a garden variety recession. It was nothing compared to this, okay? And in 2022, Bitcoin crashed from 50 down to the $16, $20 range. So it lost 70% of its value. Here, Bitcoin is going through the same crisis, and I think it's down something like 8 or 9% on the month. 8 or 9% of the month. So kudos to Bitcoin. I have never been so happy to have Bitcoin as a cornerstone of my portfolio. Then, point number two, get a good broker to take advantage of these options right now, not stock options, right, but of these options of buying stock right now, assuming you have cash. You got to have an overnight trading broker. This has become mandatory, especially as there's more and more manipulation. The stocks, unfortunately, need to be bought oftentimes outside of market hours, and so only a modern broker can help with that. Then, how am I playing this? On my Patreon, I've noted it before with my Nvidia out-of-the-money leaps that I bought recently. I think the best way to play this is deep, but very deep out-of-the-money leaps way out into the future, right? And so for Nvidia, for example, those I got were December of 2027. This is how I plan to allocate my money so far. Hoping for a rebound or to benefit from the rebound. I'm looking at the leaps and I'm looking at them out of the money. And of course, I don't want to buy the stock. I want to stay in those leaps not very long, right? Just the time that this recovers. And if it doesn't, That's a small loss because when you buy a deep out of money leap, they are very, very cheap. So if it doesn't recover, that's a small loss. But more importantly, it conserves cash right now, which is the most important thing. If you ask me, you got to conserve cash right now. If the stocks keep dropping, cash will be so important. And so, of course, when you buy leaps as well, the volatility is very high right now. So if you buy leaps, you got to make sure that you pick a strike price that has lower volatility. And admittedly, it's hard to find. And you got to put an order. And really, you don't want to have high volatility on a leap. You don't want to pay more than 50% of implied volatility. Otherwise, it's a little expensive. But it's tough to find depending on what you want. But this is the solution I found to conserve cash while still getting exposure. Point D, stay very nimble. Small. No, I would be so careful with big moves right now. Point E, if you're out of cash, go to the park, right? Go to the park. I don't know where market. I guess if you're in Europe, you can go to the market and shop for some food. Go to the park. Turn off the TV. Turn off X. Delete trading app. This is back to April 2020 levels as the most recent example of that. This is what I would do if I didn't have any moves to make or if I didn't want to follow this for the channel, right? This is what I would probably do. Now, I'm still buying, so I wouldn't do that. But if I was out, let's say I blew my last dollar on Friday, just delete the app, right? As long as you are at no risk of a margin call because you didn't use margin and you were smart, right? Otherwise, be careful. Anyways, and now, lastly, now is not the time to change allocation in retirement accounts. Now is not the time to move into bonds. Again, no financial advice, but it is what I think here. Will the Fed save us, right? JP Morgan is officially calling for the Fed to save us. JP wants to be Fed. I don't know if they can make it to the May meeting with markets the way they are right now, is what the JP Morgan Bob Michel said in an interview. Powell did not save us on Friday. That was extremely frustrating. He could have been dovish on Friday. He did no such thing. Powell is not an ally. He should have acted in 2022 and never raised rates after lying, right? He lied. He said, I will never ever raise rates. He didn't say it like that. He said, I'm not thinking about raising rates. And then we have the largest rate increase in history, 22-fold, right? So be very, very careful hoping for Powell in my view. Hedge funds seem to be in a little bit of a trouble, so there may be some forced liquidations. Apparently, a lot of Wall Street banks have demanded additional collateral from hedge fund clients. This may be, I don't think it's happening at Robinhood, but I've noticed a change in the margin requirement on a few stocks on Robinhood. I don't know if you have. Tell me if you have. But a few stocks have seen higher margin requirements on Robinhood. So this means that there must be a lot of margin call at a lot of brokers right now. So that's another important point. The Fed may have to act so as not to trigger a chain of events where forced liquidation at forced liquidation. And by the way, the drop keeps coming. If you look at, this is Polymarket, the odds of an emergency rate cut this May, right? This April, they are at 28% right now. So what do you think they're going to be tomorrow night if we have a 5% drop? Probably much higher than that. So there's beginning to be some pressure on the market for the Fed to act. Lastly, I'll tell you the last few things, which are the deals right now. HIM's at $23. Think about it. This is freaking nuts. Tesla at 218, And by the way, all of these stocks are not impacted. All of these stocks are not impacted by tariffs, right? You could say, there's going to be a recession. There's going to be parts. Maybe a component is going to have some tariffs. That's a stretched argument. They're not directly impacted by tariff. This is what they're trading at. HIMS is at 23. Tesla 218. SoFi 850. I remember SoFi. 2 months ago it was at 18 or 17? What in the world? Palantir at 65. Nvidia at 88. And you know that at this price, I find Nvidia to be a major, major steal. Frankly, look at any of your favorite growth stock. It's probably down between 8 and 12% right now. So if you're looking for deals, the deals got even better. Only Bitcoin is holding up, with Bitcoin being down only 5% on the day. And once again, I'm so proud of Bitcoin for that. This is pretty darn impressive. So anyways, this was not financial advice, not investment advice. Just entertainment, hoping you were entertained despite the circumstances. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.